and gentlemen, boys and girls, welcome to Friday update here on DataDash. My name is Russ, and today we're gonna dive into the world of macro and the markets, because this week, as you of course have seen, much things has happened with the Federal Reserve meeting committee decision and the rate cuts that still has not starting to take place, despite Canada and Europe already are on the journey. So with all that said, today we're gonna first of all cover what happened on Wednesday and what does that mean for the markets. We're gonna see the troublesome behavior of the US dollar, despite everyone is calling the de-dollarization of the world economy. The DXY is actually showing incredible strength due to the Fed decision. And of course, we're gonna cover much more assets such as the Bitcoin, the DXY dollar strength index itself. Very bullish behavior here. I've been asked also to showcase some of the cannabis stocks, so we can quickly review those. And I'm gonna give you a couple of the plays that I think would still behave quite well independently on the overall risk, which is building here around the markets. Let's be honest about that. So first of all, what exactly happened on Wednesday? To answering this question, we need to go, as always, to Forex calendar and see what was presiding to it. And as I have been covering on Wednesday, those numbers, core CPI month over month and CPI itself month over month, year on year, came below the forecast. And then, despite all the requests, all the letters, all the backs to Mr. Jerome Powell to save economy and cut, the federal fund rate remained unchanged. And with that data, at first, on Wednesday night, I thought, okay, fundamentally, I'm getting pulled up because CPI at 0.2 means we are going to get cuts this year, most likely. And the Fed played games that day. You know, they didn't let on many cuts and in fact got less dovish. The whole conference got quite hawkish, I have to say. So we saw the action on bad numbers on the previous Friday. That was bullish. And then we got numbers which are kind of even more bullish. And that's the reason why that S&P 500 and NASDAQ printed a chart, their all-time highs, and came into so-called overbought territory. That said, for the medium term, I am still quite bullish. But now another piece of data came out just right yesterday, which are the unemployment claims. And unemployment claims here at 242,000 instead of an expectation, which is roughly 20,000 lower, give us quite another picture. It's basically showing that the jobs are starting to slow. And after seeing that numbers, actually Fed might wait more. And Bitcoin doesn't like that. So Bitcoin operates quite positive in an environment where the rate cut expectations are being discussed, obviously. And if we see right now that Fed slows down on that, it not might be well perceived by the risk on assets. So those data comes week by week, so we just need to observe the jobless claim closely. I still do believe that the Fed gonna cut a couple of times this year, but they may want to push those decisions and observe the several jobless claims reports first. So for the change for us, if we need to watch actions and technicals, if we see jobless claims keep moving up, then I think the next short-term break of S&P 500 or NASDAQ could have more risk to continue down. And that also coincides with the fact of how dollar is acting bullish. And that's also not a surprise, of course, if Canadian dollar and euro are providing less return right now for people simply keeping their money in cash, let's say on accounts like interactive brokers or other brokerage companies, or who are allocated into various treasury notes, right? It's giving more incentive to the dollars. So with all this news that, you know, like Kingdom of Saudi Arabia didn't prolong this petrodollar agreement and so on and so forth, the dollar is not get weaker on those news. The dollar is actually getting stronger because it still provides the higher yield. And we're going to cover the chart in a second. The actually hitting job numbers are meaning simply one thing, that there is a risk of recession, and Fed is getting even more pushes, even more expectations to cut. So in the midterm, I think we're gonna get those cuts, and that's gonna forwardly looking give more oil, more petrol, more fuel for the market to move ahead. On the other hand, the raising jobless claims are not a bullish thing at all, unless they are actually causing and forcing Federal Reserve to cut. So for the next few weeks, we can see definitely a slowdown, and this slowdown is associated with the increasing risk of recession and market participants pricing that in and trying to take the profits or cut their losses earlier. So yeah, that will be a certain moment of deleveraging in the markets for the next few weeks, and we just have to be vigilant, and we just have to remind ourselves to look at this jobless claims and see how that progresses. Meanwhile, what does it mean for Bitcoin? The first and foremost is the fact the street is not gonna like that Bitcoin closure, the ProShares Bitcoin ETF closure below 26. And we are talking on Wall Street, they're normally looking at those ETFs for multiple reasons, but that's how they allocate. And this is for you, the line, so to say, psychological line from where onwards I think street is getting bullish on Bitcoin again, right? So we can chop here, we can start accepting lower, we can go all the way and swipe all those zones, all those gaps, go as low as 24, 23 for the next weeks. And that's very clear sign that nothing gonna happen, nothing exciting gonna happen here for me in the world of crypto as soon as, very simply said, BITO is below 26. I'm talking now about bigger macro forces. I'm not just talking about, scalping 2 or 3% here intraday, because also with the Bitcoin dominance where it is right now and with overall market positioning, everyone is getting a bit into defense mode. So I'm not also expecting that any like Ethereum driven rally would actually hold itself. But let's have a quick look on the chart too. Let's start with Bitcoin here, obviously. And if we're just gonna look at the chart here, that's exactly how I would start. Very simple, very efficient. Define the range first. This is how the range looks like. And if I'm gonna go here on 4 hourly, then you will see that we are kind of hanging by the cliff at the 66,200, which is exactly the mid range where we've been consolidating right now for months. But looking also on a, more lower time frame, this doesn't really look very bullish to me, those kind of consolidations around a bunch of equal lows or poor lows. If you would look on the order flow, you would see there's a lot of liquidity residing, and obviously I would consider the swipe and acceptance above this mid-range in order to go long. But I'm also not in rush, to catch Bitcoin around those prices. I want first to see the acceptance, and that's super important thing that a lot of the traders are forgetting. They are thinking that the fact they're buying lower already putting them in a better position. No, it's not, because if you start accepting lower, it's very probable that we also consolidate and go to the lower side of the range, and you don't want to start buying Bitcoin at 65 if then it has at least 4,000 down to go. Your conviction will be shaken. You would have a lot of sleepless nights, and that's not how the good trades are unfolding. In case we start accepting lower, there is the first bounce I would like to see from this order block and some buyers stepping in. So roughly around 63,000. And then I would see, okay, if Bitcoin is not able to bounce from here, then I'm fine to close those positions, close to break even and enter lower, where this lower going to be. And this lower can be somewhere around the range low. I would actually like to front run it slightly, because I guess a lot of participants are already waiting for that zone to be retested. So we might not wick to the exact range low. And in that case, if we start well accept above that line, target TP1 mid-range 66,200, TP2 72,000. So very nice trade, very good risk reward. You might, of course, widen your stop loss a little bit. I mentioned multiple times, but I keep most of my stop losses for those like larger trades manual. I'm actually closing when I see on the lower term time frames that there is a certain acceptance and bearish market structure that starts to unfold on a lower term time frame, on a 15 minutes time frame. So I see we are not getting to bounce there, and we start creating lower highs and lower lows. That's for me a good indication. You can also trade, for example, over acceptance of 4-hour candle, 2 4-hour candles below the zone. In that case, especially since today is Friday, I'm not recommending trading much on Friday, and especially on the weekend, due to the fact that liquidity is low and a lot of the scam weeks can kick you out and trigger your stop losses. Of course, in that case, if you don't have the hard stop loss in place, which I would not recommend for the beginners, but if you feel more confident, then you also need to keep in mind that you have to observe the trade. You can't just keep it there over the weekend and then check your phone on Monday. That's not how the thing's gonna work. So yes, please be cautious and vigilant if you are trading without the hard stop losses. Now let's go to Ethereum. I think Ethereum picture is also quite clear here. At least that's how I see that. Very similar idea. We are firstly starting with defining the range, and that's here we are. We could not hold ourselves in the upper range, and we start accepting down. And this is the range that has been forming all the way in March and April. So right now we are barely holding the mid of this range around 3,440. What I'm looking at in those cases, well, I'm looking for swipes, and I see already that the lows like that, I'd like them to be swept, and then the price accepting back into the mid-range. And in this case, well, can it go up? Sure, but with a tight stop loss as always. Now, as you remember, as for those who already know me, they understand I would never take any step in the crypto market without looking at the broader picture, and the broader picture signals me here the risk of attitude. We discussed this key level with you guys a couple of weeks ago, 105 on the DXY. We completely changed our market structure from printing lower lows and lower highs. We had a market structure break that I was indicating to you already on the 30th of May. I was saying that's probably gonna keep crypto in a very choppy territory, and that's where we are, and here we are. So right now I hear on Twitter a lot of analysts are actually calling already that was potentially the ICL, the intermediate cycle low in dollar, and the dollar strength is going to go shoot up from here. Some say as high as 120. Of course, I would not make those bold predictions because I just clearly understand that all of that would be very much dependent on the American market, on the Fed policy. Those things are not predictable long in advance. But yeah, looking for example at Euro to USD, which is like the biggest contributor to that basket, I see that that's very bearish structure. We simply bounced on grabbing that liquidity that was associated with a lot of right-wing parties basically getting their places in the Euro Parliament, and the market bounced back and now provides that's bleed down. Does not really favor any particular long-term plays for me here. Like I would not, for example, start building yet my alt backs, even though some alts are very, very promising here. I just want to look on the Bitcoin dominance and which path it chooses. Either it's gonna go up like that, or if it's gonna bleed down to 54. In that case, I will be very curious to load up on alts. And as you remember, I'm gonna load up on alts those that are looking good and holding the range low, such as for example DOD, and not those which are looking like CRV, which I have already telling you last Friday it started to accept below the range low, and here we are. 40% dumps, etc. Those things can happen. So for example, if I look quickly right now on Atom, I also see, we kind of lost this range low. So I want Atom to start accepting above here, and then I will be curious to long it. So you can make all the analysis yourself. My goal here, my target is to teach you how I'm looking at the markets, not to provide you exits and entries. Of course, there are much more complex cases when we're going to trade. And with more time passing by, we're going to go and trade also intraday. I love trading sometimes on 1 hour, sometimes 15 minutes time frame. It's a quick several thousand here and there. It doesn't harm, especially when we have the nice volatility. I love doing that. And we will do more of that when the market provides that better opportunities, better risk rewards. For those in our Telegram group, I already been putting a few signals. But if you feel that basically Bitcoin dominance will start accepting down, yes, for sure, you can try some plays with a tight stop loss and invalidation. For those who feels like trading alts, I personally recommend doing it on the platforms with the good liquidity, so you have smaller slippages. My favorite one are among the DEXs is DGate. The reason for that is a very low slippage, so you'll see the volumes are quite large here. All trading pairs are available, including the meme coins, but also including, of course, top 50 alts that I would normally trade. I'm currently really looking closely at Uni. I would love to enter the trade around 10.50, and my stop loss will be around, those lows, 9.6, 9.5. You see, there is this breakout here. We start printing high. I would just expect us to grab a little bit of liquidity from lower, and then we can push much higher. I would say 12, 13, $14 are also possible because multiple news related to the scrutiny around DEXs would definitely give Uni a nice breather, and why not to trade it on a DEX, especially if you are having a certain restrictions related to geography in your place of residence. That comes from regulators. I think also DEXs are a way forward for multiple reasons. Recommending everyone to give it a try. I'm gonna put the link in the description down below, so you can simply connect your wallet and don't have any issues related to the problems that we had with liquidity, such as the rumors around other exchanges or FTX collapse. So yeah, you conduct your trades, you enter your exits, and you are doing absolutely well, having the peace of mind and no necessity to actually provide your liquidity to the centralized exchange. When it comes to silver, since I've been asked multiple times, Russ, why are we bleeding and so on and so forth, it's absolutely normal. I was already indicating it around 32 that the correction is imminent. I do not know exactly if the correction will be fully translated into junior miners, especially the smaller ones like Pantera. When we are talking about $5-7 million market cap, it is absolutely nothing. And one big acquisition or even like purchase order can already move those prices a lot and not allow the juniors to go significantly down. On the other hand side, if we just look exactly at silver, or if you are, for example, do not have an access to Canadian market and you only want to allocate in the ETF because you don't have time, which I don't actually recommend. The CLG ETF is by far not my favorite. I mentioned multiple reasons why. They're covering a lot of bigger companies, sometimes $5-10 billion market cap. They're obviously not going to get that great moves. But this is not the only issue. The main issue with those companies that they have the practice of diluting their shares. So they're constantly inflating their shares float, pushing the price of the stocks themselves down. Now, coming to silver itself, as I said, 29.5 didn't hold. This order block, this consolidation, we broke down. Now retesting it from the lower side. I see that 28.5 is an absolute normal correction. Just retesting of the previous high. I mean, metals are trading sometimes quite simple. What I love to see is that on the Shanghai Stock Exchange and Asian markets, the way they trade silver, you actually have to deposit the silver bar into the vault if you want to trade around it. And there the price is significantly higher. It's always like outpacing American or European market by $2. I've seen multiple times when we've been trading at $29 in the West. The Asian market was around $32. That also for me indicates the fundamental shortage of silver and many more factors that yes, in the paper silver for sure, the banks are short. The COT data that I'm constantly reviewing show us that the biggest short have been building. So for sure, they might even squeeze the price all the way down to 26.5. This is also normal. It would not shake me out of the conviction. It can be quite painful, to be honest, because SILG to silver. So in other ways, how the miners would look like to position themselves price-wise versus silver, it is kind of, at the bottom of this range, but at the same time, you can consider that as in a PO3 setup and manipulation, and then we might just shoot up from here if we are able to hold this range. We might also accept down, and it's not like the chart that you can trade directly, so I would not give too much relevance. I would actually give no relevance at all to that gaps that you see on the chart, right? So again, when we're speaking about SILG, huge companies might have a lot of short-term chop and issues. And as I indicated in our Telegram group, I also want the sentiment, the bullish sentiment, to slow down, everyone to surrender a little bit on the metals. And it's just also relates to the fact that everyone was speaking of gold for years, consolidation, stagnation, and then this very bullish sentiment. So I would like that bullish sentiment to slow down. And also, meanwhile, I said, and then we'll cover it in the next episode, I am starting to look again at uranium, because we sold the top, and I think that right now the cycle low, the intermediate cycle low, is being formed. So we might start seeing the allocation into miners or Sprott ETF itself, uranium ETF that actually holds the physical. With all that said, I think that this movement in metals is very much going to provide the time capitulation to the impatient investors. So I invite you to stay a little bit patient here. Also due to the fact that gold to silver ratio is acting quite bullish. It doesn't favor much silver prices. But on the other hand side, we're getting a little bit overextended here. And we are doing also something very normal in the world of commodities. We are just retesting the previous range where we've been consolidating for years before. And it's very normal that those things, when we are talking about the assets that are dozens of trillions of dollars, that those things are taking a little bit slower. So let's have a quick look on a few miners, and they are doing much better than silver or underlying metal themselves. For example, Pantera Silver Corporation, just simply consolidating in this range. There is nothing you need to worry about. They are not creating a bearish market structure whatsoever, and this is actually quite good. What other companies you want me to look at? For example, the ones we mentioned before, silver mining. Yes, it has significant dump over the last 2 days, but once again, we have broken out of this range and just retesting it. So yes, we might create some spooky atmosphere here, especially if silver goes much lower to like 26.5. But once again, it's a bullish market structure break. It's something I've been waiting for years. We couldn't have done since basically June 2023. So yeah, it has been exactly a year for us to start like creating that structure when we've been consolidating, and then we had this moment of manipulation, and now we're shooting up. I think this is definitely not done, and just invite everyone to be patient. That's also the reason why I told everyone not to enter the entire thing, not to enter the market. We enter with the limits. Very similar look when it comes to the outcrop silver. But what I want to point your attention towards, first of all, this very bullish OBV, on balance volume. So there's a lot of buying taking place. And then this decline with such a small volume, that this decline that happened here, I think it's just to shake out the positions, because guys, honestly, you can move those stocks. Sometimes I even can move those with their like purchase of $50,000. I can move the price slightly. So yeah, you can imagine. Of course, people are expecting that silver would start correcting, and they try to micromanage their position, and then they would like to enter 1 cent lower. But their liquidity is so small and so thin, I wanted to say, that very often, of course, those like sellers are going to capitulate and price going to shoot up in a matter of 1 day, and then you would never even be able to hit those bids. So that's why I had those bids stuck, between roughly 200-day moving average and where we are right now. I'm happy to be buying as much as I can. I'm also happy to not be filled on some of those. So I think DCAing here is an amazing way to move forward. Also, Palladium itself can be very close to forming up a button here. You see those kind of formations when we've been creating the bullish market structure. Now, coming back to this order block that actually has been the one preceding those bullish market structure break. I would like to accumulate more, either directly as the metal, or you can, of course, come to Sylvania Stillwater, SBSW as a ticker. This is a major company. There's no need to be afraid that it would act like a junior. It's the very good point to add into the stock. I think right now we had 4.4. If you would look at the price chart, without any significant dilution of shares, I think we definitely can come back to roughly $10 a share. That's quite probable, especially when Palladium is gonna come back to 3000s, where it's right now at 1000. Those are, in my opinion, in whatever the scenario you're gonna take, as I mentioned multiple times, inflationary, deflationary, that's something I'd like personally to own. That's not a financial advice, but that's where I feel much more comfortable allocating my money at those levels, comparing to stock and comparing to also the growth companies, because if Fed keeps the interest rate longer, and a lot of companies like Unity, for example, that you think, oh, the chart looks so good, they're gonna break out, but then they have negative cash flow and they are suffering a lot from having the higher cost of capital. So this environment where we don't know when and how Federal Reserve gonna cut, again, my thinking is they're gonna make at least one cut in September, because those discussions are gonna be more and more fear mongering around the market about that recession is gonna come, without Jerome Powell taking a very proactive step. I think he will be challenged a lot. So yeah, prior to elections, we might have one cut. But then how many really cuts we're going to get this year? Maybe one, maybe maximum two. I don't really also expect that many cuts to happen, because the dot plot that Federal Reserve members have been publishing is actually quite hawkish. They still want to keep at least a little bit higher for longer, so to say. And with all that said, guys, I'd love to wish you all a good continuation into the week. Please trade very cautiously. We are not in the environment where you need to go all in, especially on leverage. No exuberance. Markets can stay irrational longer than you can stay sane. So please be careful, and let me know in the comment section down below. We couldn't cover stocks today due to the time. I was already overdue on silver. Again, nothing bearish here, just a longer chop. My targets for silver are still around 40, at least for the next 2 years. So you can think what happens to the miners. With all that said, I wish you a great weekend, and ciao.